The current price for Datavault AI Inc. on NASDAQ DVLT is $1.73, reflecting an impressive intraday movement of plus $0.33 or plus 24.22% as of the last available quote before the after-hours close. This volatility is a signature trait of DVLT stock and is precisely where the core expectation versus reality tension lies for this company. The general expectation surrounding Datavault is that it is simply another speculative AI-related name, prone to dramatic daily swings based on press releases, not fundamentals. Retail investors, particularly those engaged in Robinhood stock trading or using other online investing platforms like SoFi Invest, are drawn to its low share price and high percentage moves. They expect a quick trade, a flip on a headline. However, what most fail to appreciate is the deeper, unexpected reality. This latest surge isn't fueled just by general AI hype, but by a very specific and tangible recent development, a multi-million-dollar strategic investment agreement and a partnership announced just last week that targets the lucrative and highly regulated real-world asset RWA tokenization space, specifically involving the establishment of a Swiss digital RWA exchange. This move shifts the narrative from pure speculation toward a complex, globally focused financial technology play, a significant angle that challenges the common simplistic perception of a run-of-the-mill, low-float momentum stock. The common ground is this: Datavault AI, having recently rebranded from WISA Technologies, is perceived as a hyper-volatile pre-profitability microcap. The stock has been trading with breathtaking volume, sometimes exceeding its average by multiples, which is typical for a security seeing heavy interest from individual brokerage accounts. The day's range has been wide, moving from a low of $1.61 to a high of $2.05, perfectly illustrating the fierce tug-of-war between buyers hoping for a continuation of the upward momentum and sellers looking to book profits after a series of major moves in recent weeks. The contrarian take here is to look past the dramatic price action and the high short interest, which is also a contributing factor to the volatility, and focus on the fundamental shifts the company is attempting to engineer. While the stock's massive short-term run-ups, such as the one we saw a month ago on news of a strategic partnership with IBM, are exciting, the reality is that Datavault AI is attempting to reposition itself not as a pure AI software company, but as an infrastructure provider at the cross-section of data science, high-performance computing, and Web 3.0 asset tokenization. This is a complex, long-term business strategy, not a quarter-to-quarter software licensing story. The market seems to be selectively cheering the announcements without fully pricing in the execution risk or the long sales cycles inherent in enterprise-grade financial infrastructure deals, especially in a heavily regulated jurisdiction like Switzerland. It is important to note that the institutional ownership, while showing a recent uptick with small positions taken by names like Vanguard and JP Morgan, remains remarkably low overall, a characteristic that naturally exacerbates retail-driven volatility. This current price action is a clear expression of a high-risk, high-reward bet on future execution over current financial health. Looking closer at the recent stock movement, the sheer trading volume is the headline. The fact that over 50 million shares traded in a single day, against a total float that allows for these kinds of swings, confirms that retail sentiment is the primary driver, overshadowing any traditional analysis you might get from a Fidelity Wealth Management advisor looking at discounted cash flow. The rally on the announcement of the Swiss digital RWA exchange and partnership with Max International gave the stock a significant upward thrust. The market is interpreting this as a major credibility boost, as linking real-world assets to a digital exchange in a country known for financial rigor suggests a level of institutional seriousness that the stock frankly has lacked. However, the subsequent dips, like the 3.6% pullback seen recently, show how fragile that sentiment is. Any slight negative news or just profit-taking can send the stock reeling just as fast as it surged, which is a key consideration for anyone using interactive brokers trading to manage their positions. The sector momentum, which is the broader AI and digital asset theme, is undeniably strong. Companies associated with AI are getting a significant valuation premium, and Datavault is effectively riding that wave by repeatedly emphasizing its AI-driven data monetization platforms like DataScore and DataValue. This sector tailwind gives the stock a buoyancy that its current financials, which include significant negative margins and substantial debt, do not justify on their own. The market is projecting future growth onto a highly leveraged situation, creating a powerful but fragile momentum trade. A deeper look at the company's business model reveals the complexity behind the ticker. Datavault AI Inc. operates in two main divisions, acoustic science and data science. The core pitch is the monetization of data assets through AI-driven valuation and tokenization, primarily through their high-performance computing infrastructure. They aim to be the operating system for verified data in the proof economy. This is a sophisticated, highly technical concept that covers everything from licensing name, image, and likeness through secure metadata to providing data analytics and lead management for large events, a remnant of their predecessors' business lines. The company holds over 70 issued and pending patents across AI, blockchain, and tokenization, which is a tangible asset often overlooked in the high-frequency trading of the stock. While the business model is intellectually sound, data is valuable, and AI can make it more valuable, the practical execution is where the rubber meets the road. Older reports and past performance show the challenges. The revenue for Q2 2025 was a modest $1.7 million, despite a reported year-over-year growth of 476%, a number that sounds massive but is off a very small base. Crucially, the company posted a sizable EPS miss of -54 cents, widely missing the analyst estimate of -14 cents. This consistent pattern of low revenue and high losses, exacerbated by substantial non-operating expenses and a quick ratio pointing to restricted liquidity, is the financial reality that constantly bumps up against the market's high-flying growth expectations. It's a textbook case of a small company with grand visions and a significant cash burn. If you're a client using Schwab Intelligent Portfolios or any other major intelligent portfolio service, a stock with these fundamentals would likely be filtered out immediately, yet it remains a magnet for self-directed investors. The future outlook for Datavault AI Inc. depends almost entirely on translating its ambitious strategic partnerships and new revenue guidance into realized, recognized revenue, not just announcements. The company has targeted between $40 and $50 million in annual revenue for 2026, a massive leap from current figures, driven by tokenization demand, licensing deals, and the aforementioned partnership with IBM. The expectation is that these large-scale partnerships will immediately begin producing substantial cash flow, validating the current high valuation and explosive stock price. However, the reality is that large enterprise licensing deals, particularly in new, complex areas like RWA tokenization, are notorious for long lead times and potential delays. The risk is that the market's patience will wear thin if the upcoming Q3 2025 earnings call in November, which analysts currently project a loss for, does not show a clear, measurable path to that $40 to $50 million. Key catalysts to watch are the progress of the Swiss digital RWA exchange, the actual closure and deployment of the previously announced $150 million strategic investment, a significant portion of which is in Bitcoin, adding a layer of crypto volatility to the equation, and any new licensing deals tied to their data monetization platforms. The opportunity is clear. If they successfully execute even a fraction of their grand strategy, connecting physical, real-world assets to a secure digital framework, they could capture a slice of a potentially trillion-dollar market. But the risks, Regulatory hurdles, competitors with better capitalized incumbents, and the simple difficulty of scaling a complex technical business are equally immense. This creates the perpetual tension that makes the DVLT stock so volatile. For those of you managing your own finances through Fidelity ETFs or exploring self-investing on platforms like Robinhood app, the lesson here is that you are investing in a dream, a technical blueprint, not a consistently profitable business. The current price is a valuation of that dream. Ultimately, the central insight here is the dramatic disconnect. The market expects Datavault AI to be a pure-play, quick-flip momentum stock, and the daily swings, often involving millions of shares traded through platforms like SoFi Active Investing or Fidelity Brokerage, certainly support that view. The reality is that Datavault is building a complex, enterprise-level digital asset infrastructure business that requires years of execution and massive capital expenditure, all while operating with a balance sheet that screams high risk. The stock price today at $1